Hey, hello, everybody. My name is Andy Kizik at OTC Markets, and welcome to our Thought Leadership educational series. And today we will be talking about implementing digital media strategies that complement your investor relations programs. Before we begin, I just want to go over a few housekeeping items so you're familiar with our format today. The presentation will run approximately 30 minutes, after which we will have a Q&A, and you can post your questions into the Q&A section on the Zoom interface located at the bottom of your screen. What we will do is, if there's anybody who's interested in having questions that are not answered, send them in. But after the webinar, everybody who is registered will receive an email with a recorded copy of this, and the presentation will also be available and archived on the OTC Markets website. So we have a distinguished panel today. And before we get started, what I would like to do is just go through what we're going to talk about. So as we begin, for digital marketing, many of us are quite familiar with digital marketing and how companies influence audiences as we search online. Why do certain ads pop up on your Yahoo Finance page while searching for a company's share price or news? How do you think about incorporating digital marketing strategy into an investor relations context using online channels for publicly traded companies? It will cover some topics like, how does this impact public companies' financial businesses separated from the operating business of the company? Creating and distributing relevant content, marketing that helps a corporate issuer get the word out and create interest in your company. How does this target and drive lead generation to support your investor relations program through the online channels? So basically, the content that you publish, where it's going, who it's getting in front of, and what type of action you're hoping to achieve from your potential investor audience. And we have a distinguished panel today, and I would like to introduce everybody on the panel, starting with Grant. Grant Fraser is the CEO and co-founder of Digitonics, founded in 2010. And Grant has developed award-winning intellectual property that enables publicly listed companies to engage and converse with retail investors, an experienced digital marketer and mobile media specialist that can be trusted to achieve results in a manner that protects the brand due to deep understanding and respect to compliance and legislation. So welcome, Grant.
Thank you.
We also have Scott Powell. Scott has more than 20 years of Wall Street experience and has provided investor relations and investment banking services to hundreds of public companies. Scott is currently president and CEO of Skyline Corporate Communications, an investor relations and corporate communications agency with offices in New York and Boston. He is also investor relations for diagnostics company Volition RX Limited and chief financial officer of Volition Americas, Inc. And lastly, our very own Christy Harkins, who's the chief marketing officer for OTC Markets Group. She's responsible for continuing the transformation of OTC Markets brand and stewardship of all of its marketing and PR initiatives. Thank you and welcome everybody to today's panel. So let's think about getting started here. I want to open up our discussion with a strategy, how to get started. How do we enhance our IR with the social media program and platform? So I want to start with Scott. Scott, how do you create the strategy and what are your basic building blocks for success when bringing this together?
Sure. Thanks, Andy, and thanks to the OTC Markets for inviting me to be a panelist during today's webinar. Very much appreciate the opportunity to join today's webinar and hopefully contribute some thoughts and ideas here with regard to social media strategies. Skyline is a traditional investor relations agency, so we spend a lot of time working with management teams directly, strategizing talking about their objectives and ways to implement and achieve their objectives as it relates to communicating better with investors more effectively and broadening their outreach to the financial community. And obviously social media is an important component, and it's one of several components to a company's investor relations strategy. And I think a very critical component, you have a number of different platforms through which public companies communicate, right? Their website, their corporate PowerPoint, press releases, direct communications with investors, attending conferences, speaking with analyst research reports that are published on various companies. So there are all these different modalities and channels through which companies reach their investor audience and the financial community. Social media over the past several years has become a very, very important additional modality. And we counsel our clients on the importance of utilizing social media, developing a social media strategy, and really how critical it is to think about how they want to utilize that tool and to maximize the ability to reach their current investors, but also new investors.
I think, Scott, as we had talked sort of at the outset of prepping for this call, that a lot of what you had said is kind of start first with that building block of really making sure that you have either an IR section of your website or your own investor relations site as kind of that platform to jump off of. And then from there, you can start to think about what are the things that you're doing that can actually form that cadence of a content development plan. Is that how you typically would kind of start?
Yeah, exactly. We're a full service agency, so it's really about, this is one component to a company's overall strategy for communicating to the financial community. When we take on a new client, that's usually how we operate, is first to look at the PowerPoint, the corporate website, recent press releases, make sure that the messaging is consistent, is solid. And then, because a lot of that content is then utilized through the company's social media channels. So if the content isn't really robust on those platforms, you're going to have less than robust content that's being pushed out through social media channels. So it is critical to get those components in place first, and also to have a comprehensive investor relations strategy, right? To look at the variety of components through which companies can communicate with investors and how to maximize all of those. And social media really is emerging. It's fairly new. When all of us were growing up, we didn't have Twitter and LinkedIn, so this is all new. And a lot of executives, for them, it's very new as well. And so a lot of companies come and say, how do we harness the power of social media? We know it's important. We know it's very impactful and powerful. How do we do it?
Oh, Andy, I think you went on mute. There had to be at least one of those in this webinar, so I'm glad we got that out of the way.
When we look at content, we're talking about, press releases, we're talking about videos, we're talking about podcasts. When we look at the digital landscape that's not so static, what works and what might not work, what might work today might not necessarily work tomorrow. I guess when we launch a campaign of sorts and start to plan it out, one of the questions is, how do you monitor a campaign? How do you organize the planning to create, to test and adjust the content, the reach, the metrics? Maybe we can start with, what's the next step now that we've laid some groundwork with your basic IR plan? I'll just put it out in general, like, who are you trying to target? How can we get started with that? And maybe to get targeted, Grant, how would you start a program to define that target audience and start implementing this phase 2 of an IR outreach strategy with a retailer demographic?
Sure. So yeah, thanks again for the invite. So to answer that question, I think it's worth looking at the markets are very different. When we first got involved in the investor relations sector over 5 years ago, we had this approach that the client is always right, and they were really specific in regards to the type of demographic behind your retail investors, and more often than not, that was a certain age, elderly, certain gender, certain race, and we were kind of working towards that. But actually, our own analysis suggested that if you're only targeting that specific sector or specific demographic, then you're leaving behind millions of retail investors. We've got stats that show that there is now far more than ever before female investors. The younger demographic are involved. I think if the pandemic has done one thing, it has made almost everybody become a retail investor. We think we put that down to the ease of these trading platforms, and obviously live sport being cancelled. So these people needed some way of using their money. And what we're also seeing is that it's not just North American retail investors that can be considered. It's even with an OTC ticker symbol, you can market to retail investors on a global basis. We've looked at huge financial news sites like yourinvesting.com, like your MarketBeat, your Seeking Alpha, and they all have a certain demographic of people that are viewing them, and that should in theory help you target a retail investor. If you look at investing.com, they're engaged, they're mobile, they're educated, they're high earners, and they're 25 to 54. MarketBeat still has a large spike in the male demographic. I think it's 78%. But what was really interesting is they saw a huge increase in the volume of traffic they were getting from the younger demographic. In fact, they report over 60% of their traffic is coming from ages between 25 and 54. Now, based on your last questions about social media, a lot of CEOs, a lot of boards, they're obviously not used to this sort of like social media type environment. But believe me, these people aged 25 to 34, they've been using Facebook now, Meta, Instagram, TikTok on a daily basis. So although you're not using it yourself, you do have to produce content where your retail investors of now and in the future are going to be consuming. So I am more than happy. We've got a 66-page document in regards to audience demographic analysis. I'm happy to give that to anybody that asks for it, because it really makes for quite impactful reading, and it will probably change the way you guys are actually marketing to retail investors.
And I think a lot of that, just as a starting point for thinking that through, comes down to really thinking about your business and where you see your trajectory going of that retail investor. I mean, from a category specific standpoint, it's probably going to be, I'm sure you've found, Grant, quite different depending on the category you're in or the type of investor that has traditionally held your stock, and then where is that going in the future? And then how do you set yourself up for success by really choosing those channels and building those programs that best meet that audience that maybe you're looking for responsiveness to over the long term?
Yeah, very much so. I think if you take one thing away from my section on this panel, is that everybody needs to understand the IR story. And that is really important. There's talk of promotional marketing. Fundamentally, it boils down to this IR story. A brand needs to carve an identity for itself. It needs to make clear who they are, and more importantly, what they do and why they do it. And stories have always had a primal effect. From cavemen to today's ultra-connected millennials, stories capture the attention and they engage on a different level. And research shows that stories are 22 times more memorable than facts alone. And it's only through effective storytelling that can you create an emotional or deeper connection with an investor. So moving beyond the fundamentals, the technical analysis, stories have a power greater than rational thinking. And I think it's one of the reasons why companies like Tesla command a greater marketing cap than Toyota, Volkswagen, General Motors, BMW, and the rest put together, while selling only a fraction of the cars. So, if you do take one thing away, it's your IR story, your why an investor will become a shareholder. It is the story framework that your company needs to capture. And yes, you can do all these marketing channels to get, and in theory, get that story out there. But first of all, you have to carve that IR story and then think of the best ways of getting that IR story in front of the noses of your ideal demographic of investor.
I think Oh, sorry, Andy, go ahead.
I was just going to say, as you have a strong IR story, let's say strong news flows or execution of a project that are positive and realistic, you know, do we want to look at a consistent output with longer term objectives? So when we look at that process, how do you start to, like, do you turn on the throttle? How do you start to manage that? And then looking into it into a time basis over 3 months, 6 months, how do you warm up into that? How do you share that?
Yeah, I mean, we've been doing this for 5 years, and we've seen all types of companies. We have companies coming with absolutely huge budgets and wanting to spend over a 5-day working period to get huge bang for their buck. And then you have others that are actually wanting to have a more sustained approach and have a, what I would class as an always on, turned on approach, basically. And I think they both work. If it was me, if I was a CEO of a public listed company, I would definitely suggest having an always turned on approach. Very quickly, and going back to stories, we have a client that, you know, the CEO has never needed to be sold about the power of IR marketing. He was bought in himself. And what he did was he had his own internal team, his own PR firm, and he basically employed maybe half a dozen investor relations companies like Digitonic and others to work on this always turned on approach. And when I met him in January, I could tell he was under pressure. I could tell he was stressed. Obviously, his investors made by the board were suggesting, look, you've spent an awful lot of money on IR, and the trading volume isn't phenomenal. I think from March, the trading volume was on average about 379,000 shares per day. The share price, like, you know, a lot of good value companies at the moment was on the way down. You know, why do we keep on spending in IR? Have I made the wrong decision? And interestingly, yesterday he announced really timely news, and he generated over 183 million shares traded yesterday, and his market cap went up 23 million in one day. At one stage, he was over 90% up in the share price. And that to me was the power of always turned on IR. That company would not have achieved those phenomenal results on that one press release alone. His always turned on approach, consistently, day in, day out, month in, month out, creating this IR story, finally, eventually paid dividends. And that is something that I would recommend everybody who's listening to this webinar to really think about. Too often companies come to companies like Digitonic when their share price is being significantly damaged, or their trading volume has for a sustained period of time been on the way down, and they're looking really for a miracle to help them turn that around. That is not what a savvy CEO does, or a savvy board. A savvy board employs IR firms, both internally and externally, when their company is doing well, and because you can get an amplification that you can't get, you know, when it's on the way down.
And I think just to build on that for a second, you know, I think one of the things that sounds scary about that sometimes is, you know, if you think about, oh, I don't have a head of IR, or, you know, I have one person maybe that touches social media, or, you know, how on earth am I going to build this kind of always on strategy? I mean, obviously there's professionals like yourselves that can help us do that. But I think there's also the other side of this, which is kind of, how do you start, if you haven't been doing it, to build that organically? And in many cases, it might be the partnership of both, right? So starting to figure out, okay, what are those events that I'm going to be at that would be important for a retail audience to understand? What is that type of thought leadership content that I'm putting out that helps, to the point you were saying, Grant, kind of tell my brand story? What are those news items or news hooks that I have going on? What about the investor day that I'm about to do? And how do you get into a consistent sort of cadence and rhythm that can, again, it can start with your CEO, it can start with your CMO, it can start with just your social media team, but it's a place to start as you kind of build into, I think what you're talking about as well, is that even next level of IR and support, you know, that I think is a fantastic place for people to be working towards, but know that, you know, the people on this call likely are in all different spots right now with their, you know, kind of digitization of their IR strategies.
Yeah, very much so. And looking at their own website is a good place to start. I am still amazed at how many companies who are spending even a lot of money on IR haven't sorted their own website first. So for example, on key days where you're getting good quality, press release and news flow, there is going to be a spike of traffic towards your own site, because it's only natural for a retail investor to do a quick Google search. It's important that your company is then found, and it's important when that click happens and they go to your website, that your website servers can support that increase in volume that is being generated by your hard work. And if I'm being honest, this sector is probably the only sector I've seen where companies aren't always scrutinizing their own website traffic. We've come from the automotive sector, helping BMW, Audi sell cars. They literally analyze everything that goes on in their site and every element where in theory, the customer journey is broken so that they can fix it. Whereas quite a lot of companies we speak to have a good website, put up good content, but don't do any analysis and don't learn from what their traffic is telling them that they need to do as a business.
Scott, turning to you on comments with that. So we talked a little bit about IR. We're now talking about consistency of messaging, delivering messaging, using the strength of maybe an earnings report, a transaction. But how do we balance that? What comments would you add to that to kind of find and strike that balance of consistently moving forward with an IR strategy, and then get some comments?
Yeah, I completely agree with Grant and Christy and their comments about, not that IR isn't something you turn on and you turn off. It's not something you turn on when, as Grant mentioned, your share price is down or your liquidity is down or you've had some bad news. It's something that you always turn on. So I agree completely with what Grant was saying earlier. We counsel our clients with this as well. We tell them you are now, once you're a public company, you're now running two companies. You have the operating business. So whatever product or service or drug you're developing and you're providing to the marketplace, but you're also managing the public side of the company, right? And that's totally different from operations. And some CEOs understand that fully, and some of them do a great job. They're at every conference, they're constantly in front of the media, they're talking to investors on a regular basis, they're major shareholders. We often see too many companies come to us and they've had something bad happen to them, or they're trying to push the stock up a little bit, they need to raise capital, and it's always the wrong time to come to us. And generally they're disappointed because they've come to us at the wrong time, or they've decided to implement at the wrong time, right? IR is something you do, you turn on, you leave on in good times and in bad times. IR is a lot easier in the good times. IR is really hard in the bad times, but that's the critical time when you actually need to be more engaging with your investor audiences in those tough times, so you can communicate to them what's happened, what you're doing to fix it, how you're trying to ensure that it doesn't happen again. And obviously social media is one component, of all these different communications channels, and has just become really an incredible platform to reach so many, retail investors that, as Grant mentioned earlier, were never part of the, investment community, and now have really found a voice, right? Just that's something we maybe hadn't talked about earlier as well, was just that there's a voice now, a power amongst retail that I think for a long time had felt kind of marginalized. And I think companies need to understand not only the importance of a always-on strategy, but also the importance of retail and the power of retail to drive liquidity in your share price.
So we have consistent news, we have consistent participation, and now I want to move a little bit on analyzing and tracking in terms of measuring the impact. Okay, so you have the news flow. Grant, maybe you could talk to us a little bit about how does one, as a corporate, start to create the analysis, tracking, and measuring the impact of this? How does one gauge that?
Sure. So as a business, we typically have two different sets of KPIs. We have the client's KPI, which is fundamentally the volume of stock traded, the share price, and the market cap. But we know in order to achieve positive in that KPI, there are multiple other KPIs that we as a business are analyzing. And I'm happy to share that, because I think if everybody started to analyze similar KPIs on their own website, they'll probably benefit. But fundamentally, when we first started, we were looking at getting the most amount of traffic and trying to be profiled. So not just the lowest cost per click, but the lowest cost per click on a highly profiled individual, because you want to be marketing to retail investors. So that's kind of key. The other thing as well is closely looking at dwell time. You know, that was one of our metrics that we looked at, was, is the traffic that's coming to this content that's been created, are they dwelling? But what we found, which was even more powerful, was to optimize based on not just dwell time, but also scroll conversion. So 2 minutes dwell time plus 75% scroll conversion. That's the type of traffic that we're wanting. And what that means to someone that's maybe not in marketing is that the traffic is good quality. It's consuming your content because it's scrolling up and down the page. That's where you get scroll conversion, and it's dwelling for long enough for them to take in the information that you're giving. And as well as that, you know, there's a lot of other social media KPIs. One thing that we really focus on is we're very video centric. Again, this is probably a shift. People are consuming content, both financial news, in a different way to what they used to. Video plays a key part of that. So it makes sense to optimize your activity to ensure that people are watching your video content plus 50%, plus 75%. The other things that we look at is event triggers on the page. So has that traffic that's come to our page, have they requested to download the report? Yes, no. What percentage of the people that downloaded the report have asked to download the corporate investment deck? So all these small KPIs combined make up a successful investor relations campaign.
And then I think even within social media channels, you know, there's things that you can look at just to kind of, you know, get a sense for how you're doing relative to the rest of the landscape out there. So whether that's looking at just, you know, impression numbers, video views, are people engaging in your content? Are people sharing? Again, just it's a more, I would say it's almost more qualitative of a metric in that sense, but it does give you, are you growing your follower count? So are you broadening that audience that you have a chance to reach? Those are some of the things that we look at, not to the pure KPI side as Grant's talking about, but at least to give you an indication of how is your reach growing over time? Are you creating content that people are interested in, willing to share, and willing to react to?
So this has been extremely helpful in terms, for me, about understanding the relationship, but I'm an impatient person, okay? And I want to jump to some things where a lot of our audience today is trying to grasp all this. Some are implementing it, some are not. Grant, maybe you can give us some do's and don'ts, balance out some things, because when I talk to a lot of corporate issuers, they want to engage in a particular process, but I think they want to jump to the end. And they, you know, to what Scott said earlier about, you know, making sure you have your web page up to date, your web page, all the details that you can get for consumption. Maybe you can give us what companies should worry about, particularly in the keyword of not being too promotional. Maybe some do's and don'ts would be helpful. And I could get all your comments actually.
Yeah, just in regards to that not being too promotional. The promotional is not actually a word that we typically use at Digitonic. We like to look at marketing of the IR story, but what's the do's and the don'ts? I think I can only speak at this from an external perspective. So fundamentally, you as a public listed company might have your own IR team in-house. You might be using, you know, some from PR firms. And then when you're trying to do IR marketing, you're then in theory bringing in IR support. Quite often when I go onto pitches, I spend the first 10 minutes trying to defend companies like ourselves, because quite often I hear, oh, we've done IR in the past and it's never worked, or we've done IR in the past and we've had our fingers burnt. That's a common phrase that I hear. And then when I ask how they've had their fingers burnt, it amazes me that there's no transparency between the IR firms that they are employing. Fundamentally, if you're employing an IR firm, they need to spend your marketing budget as if it was their own. They have to be 100% transparent in regards to how they're spending your money, which marketing platforms that they're using, what are the cost per clicks, dwell times, etc. So really, you know, dialing in on that. Don't just give them money and then forget it. Also, what to do is we definitely see the best success of companies who are yes, treating us or paying us as an external IR source, but actually treating us almost as an internal team, real transparency. We're under NDA, we're under embargo. As a result, we can speak freely and really helping them to craft that IR story. Don't just rely on email marketing. I think that's one thing that I've noticed in the 5 years we've been doing this. The IR sector seems to be incredibly reliant on email. Thankfully, people like Scott are focusing a lot on social, but email still plays a big part from a public, perspective. But in theory, email marketing is incredibly difficult. You're not really in control over when the emails are actually consumed. There are far better new inboxes, such as the WhatsApp, the Telegram, the Apple, the Android messaging. Those new inboxes on smartphones should be at the forefront of your IR strategy, which is really, really good. And really, from day one, agree milestones. What are your KPIs? What do you want to achieve, basically, in this activity, so that when you're undertaking the campaign, it's done with your key goals in mind. And as I mentioned, some people just want a massive bang over a week. Others want a sustained long-term increase in their average trading volume. Make sure that your companies are using multiple different types of marketing channels, and they're not just relying on the good old faithful. And I think that's probably a good place to start. I probably could talk for hours on all these things, but that's probably a good place to start.
Let's turn to Scott for a minute to comment around the same topic.
Yeah, I think it's important to, as Grant mentioned, there are a couple of themes here. One is always on. The other is utilizing multiple channels. As Grant mentioned, don't just rely on one modality to get the message out. It's important to utilize multiple channels. I think the question was also about, sort of promotion. Investors are smarter than a lot of companies think they are, and they know when you're putting out, let's call it fluff content that isn't really meaningful or impactful corporate content. So whether it's through social media, whether it's a press release that isn't really that meaningful with regard to company news, we always caution clients that it's better to put out fewer but quality pieces that are really talk about company developments. We've had a few clients that have been really short-term clients where they just constantly on Twitter every day. They want to push something out on Twitter. Scott, you guys create something for us to put out there. And when it's just done over and over and over again, it doesn't have that same impact. Investors over a period of time are going to start to ignore your message. They're not going to really read, or follow you anymore. And so that consistency, that over communicating can actually be a negative in the long term, because instead, when you finally have something really important to say, hey, we have a great contract, or we've signed up with this amazing new customer, or we've just launched a brand new product, investors are paying less attention to it because they feel that because you've put out less than important content previously, that the time you actually get important content out there is less impactful and may go more unnoticed. So we always have that balance between quality and quantity.
Yeah. So, and Andy, can I add just on that? It's important that whatever IR strategy you have, it has to be fundamentally compliant. There's a number of ways of ensuring that is the case, but I think the big thing for me is whichever IR companies that you're using, you need to make sure that no content goes live without your sign off. And that means that you're in the driving seat. So no matter if it's written in their tone, it needs to have content that you as a company are feeling is legally allowed to be used. And that is key.
I think one of the good sort of tests of that, right, is sort of looking at it from a perspective of, yes, you're telling a broader story about your company and you're putting it in context, but are you factually representing what's happening here? Almost taking that journalistic sort of style, just the facts, ma'am, kind of thing. And that you don't want to be over editorializing, adding additional commentary. You really want to be reporting on what those key facts are, or what that news story is, and sort of using that as a gauge for, am I kind of transparently delivering the information that I'm looking to put forth?
Christy, while we have you, I want to turn to you as a company and as implementing a strategy. Maybe you can tell us a little bit from your experience at OTC Markets, some of the practices and developments you've grown organically to use and how you have measured some of that success and what you've learned over the last few years.
Sure. I mean, I think for us, the way we try and think about it is sort of a continuous journey of strengthening what we're doing, both from a corporate brand perspective, as well as from an IR perspective. And so, we've added each and every year to the plans that we're putting forth. So whether that's, looking at our social media channels and saying, okay, how do we increase our engagement? And so using tools like Canva that help us put together more interesting visual content, knowing that that plays much better than just pure static tweets or posts. Looking at video and podcasts and sort of more dynamic content, again, helping kind of break through and build up that engagement and those audiences over time as we think about social media. But then also as we think about purely what are those levers or what are those points of content that we have from an IR standpoint, how do we grow those over time as well? So making sure that we're doing more interesting presentations when we deliver our quarterly results, that we're also posting those on social media, that we're leveraging the website as a way to deliver some of that dynamic video content, as well as all of the financial content. And then just, again, over time, adding to the mix of things, the mix of channels, which is one of the things that we talked about, the opportunity for really our company and our employees as well to help us kind of broaden the reach of those different efforts that we're looking at. So I think a lot of it comes down to thinking about the tools that you have in your arsenal today, deciding how those can play out from an overall IR strategy point of view. And then also just thinking about where are the places that you might want to go that you haven't been before. So we as a company within the past year or so went to Instagram. And I wouldn't say that that makes sense for every company, but we had a fairly decent Facebook following, and knowing that the investor audience keeps getting younger and younger, we wanted to be putting out brand content in that channel to build that over time. While our audience is much bigger on Twitter, it's also looking to the future to say, where do you want to grow and where do you want to be able to have those connection points over time? And then I think from a measurement standpoint, I mean, really it's each of these tools that you might be using from a social media perspective all have analytics that kind of help you better understand how those things are doing. And so how do you, at any given point, change up the mix of what you're doing or add in some paid components in order to really broaden the reach of a particular piece or piece of content. And then how do you, again, to the points we've talked about, look at the website analytics, whether that's Google Analytics or another tool that you're using, and really let that inform and shape how your team or how you yourself spends your time and your dollars.
This has been fabulous. My inbox is filling up with a lot of questions. So I want to start jumping to questions because I think this is such a hot topic in helping companies understand it, that I want to go to a first question. So thanks everybody for the preliminary presentation. For all those on the audience who'll be able to, if you post the question and we don't get to it today, we'll be able to get it answered, but I want to get through some of these. First question here. For companies that are not well adept at social media implementation, what are some initial steps that they could take? So I'll repeat the question. For companies that are not well adept at social media implementation, what are some of the steps that they could take? And I'd start with Scott, and then we'll get some other comments around the session.
I think there are a few different things. Looking at who their current investor audience is and who do they want to reach down the road? Because sometimes the current investor audience is not the investor audience that they want to continue targeting down the road, or maybe they want to broaden the audience. So I think understanding the current audience, understanding who they want to attract later on, and then understanding which social media platforms are the most effective. So LinkedIn obviously is much better for targeting, sort of white collar professional investors, hedge fund managers, analysts, doctors, lawyers, and Twitter has a lot more of a younger demographic, more of a retail following. So if the company is looking to attract more institutional investors, maybe it's a little more emphasis on LinkedIn, or maybe the content on LinkedIn differs from the content on Twitter. Maybe it's not the same messaging or same post. And if the company is looking to expand retail, maybe look towards Twitter or Instagram or some of the other platforms that have skewed towards a younger demographic. And then I think just building on Christy's point earlier, which I thought was a really interesting point, is, harness what you have available to you. Look, what have you not been doing as a company that you can do differently? What additional things can you add on? I look to a number of our clients that they'll come to me and say, Scott, we're a Canadian mining company. We're on the QX or the QB. Why should I do anything with social media? No one follows us anymore. Or Scott, we're a NASDAQ listed wire and cable company out of Taiwan. Why should we engage in social media? So I get resistance sometimes from these companies, and I say, well, look, just because many of these junior mining companies in Canada, or many of these companies in sort of traditional industrial industries don't engage in social media, be different. Be one of the companies that does things a little bit differently. And okay, if you're pulling rocks out of the ground, don't talk about that maybe necessarily. Talk about where your products are going. Maybe they're going into EV, maybe they're going into wind power, maybe they're going into really interesting sectors downstream. Let's link that up and make it more interesting and more attractive, maybe to a younger demographic, maybe to people that look at different industries. So these are some of the coaching and sort of thoughts that we have when we come to work with new clients.
And Scott, and I would agree with that. I would caveat it by saying if you don't have the time or ability to focus on a number of things, make sure you do one or two things incredibly well. It's much better to have, a social media following on one platform that's pretty big and pretty engaged than have half a dozen that's small and not engaged. That's really important.
Yeah, I think that's been really critical. And I think, a lot of times what happens is there's always the next new thing, right? There's always another channel that's popping up, another medium. And I think, you have to be judicious and think about what your time frame looks like and what, even to a certain extent, what are the people on your team comfortable with? We've found that particularly on LinkedIn, we exponentially increase our reach if we get our sales team involved, or if our CEO gets involved in sharing some of those brand messages. And so having an extensive follower network, not only for our brand channels, but then being able to capitalize on what your employees are typically comfortable with and used to sharing on, is also another place to start. And maybe that's LinkedIn, or maybe that's Twitter. If you think about your audience, but also think about where can you best tell your story, and where can you leverage the assets that you have that may be beyond just your own team. It may be looking to your senior management team, or to your sales team, or just other employees that are active in those platforms.
That leads me to a question that, for best practices for OTC companies. If I'm a CEO of an OTC QB or OTC QX company, how can I manage my engagement? How can I emphasize my experience in utilizing what's in front of me, such as the OTC IQ portals, and maybe share some of your experience on what companies can look at from the market perspective?
Sure. I mean, to the point you just raised, Andy, we certainly encourage all of our QX and QB traded companies to really think about IQ and what they're posting through IQ, which then leads directly to our consumer-facing OTCmarkets.com website. Think about that as an extension of your IR program, because that's where retail investors are going to look up your company profile, to understand the news and the financial results that you're putting out. And IQ really can help you add to that story. So the ability to post your investor presentations and have them appear on your quote page, to post your most recent, videos, podcasts, any kind of content that you're creating. Think about that really as another channel where you've got investors actively looking for information about your company that you can, again, use to kind of broaden the reach, as we talked about, of your investor stories. And so IQ is really the facilitation of that gets your materials, your content, live onto your company quote page. So we certainly encourage everybody to take a look at that. And then the other thing which you'll have available once we post a couple of handouts, both from Grant, Scott, and then from OTC Markets, is just the different social channels that we have. Because again, tagging your market and making sure that we have visibility to it and can help you reshare content, all those things become really important to, again, broaden that message beyond maybe the reach that you have just individually for your company.
That's an excellent point. And to Scott's earlier point about leveraging LinkedIn, hashtagging OTC Markets, OTCQB, OTCQX, your network might be 1,000 or 2,000 people, but adding that other network multiplies that very much geometrically. I have another question I want to jump into really quickly here. Please compare some of the benefits versus risks of utilizing social media as a publicly traded company. How might I mitigate the risk? I'll repeat it again. Please compare some of the benefits versus risks of utilizing social media as a publicly traded company, and how might companies mitigate these risks? And I'll leave it open to whoever wants to jump in first.
I mean, I think we've talked a lot about the benefits today. So in terms of getting your story out there, increasing your reach, growing engagement, and kind of your understanding, companies' understanding, investors' understanding of your offering as a whole, I think are all the positives. I think, we talked a little bit about this earlier, but as you mitigate risk, I think part of that comes down to, making sure that you're very tight in terms of the story that you're putting out there, in terms of the types of posts and communication that you're putting out there. If that means liaising with your legal counsel to make sure that, you as a corporate entity are comfortable with the types of information that you're putting out there. I think the other thing you need to think about is just how responsive you want to be to commentary and how you want to handle that as a company. Because you certainly want to be in a position where any statement that you're making, is a public statement. And so I think just having those checks and having a lot of those conversations up front can help you mitigate, any of that risk or downside.
I think Christy's absolutely correct. What we notice is, in terms of risks, we notice that many public companies don't employ the same protocols when it comes to posting on social media that they do when issuing a press release, for instance. And that can be a danger, because with a press release, there's vetting that goes back and forth. So for instance, we have a company in registration to complete an IPO in the next couple months. And the number of people involved in reviewing this press release, we wrote it, it went to the company for their edits, went to the board for their edits, went back to us. We then sent it to legal. The investment bank wants to review it. Then the banker's legal counsel wants to review it. So there's all these layers and checks and balances before the press release is issued to the public. We often don't see the same levels of checks and balances when it comes to social media posts. So oftentimes it's, someone has an idea, and sometimes the CEO doesn't even know what's going out. Sometimes legal counsel doesn't know what's going out. So you have challenges about information going out with fewer checks and balances on social media. So I would encourage companies to implement some of the same protocols and best practices when it comes to disseminating corporate information through social media. And then secondly, make sure that people within the organization know what's going on and what's going out there, so people are aware of what's been disseminated publicly, what hasn't been. So I think those are some important sort of checks and balances for public companies to keep in mind.
So I have another question that I want to start moving towards, and this relates to, we talked about digital KPIs, digital marketing KPIs, Grant, and Scott, we talked about fundamental IRs. The question relates to how do the presenters feel about measuring results other than the KPIs? Historically, trading volumes seem to be a good candidate. Is there anything else that is a good metric for measuring the IR results, in your opinion? So,
yeah. So fundamentally, every CEO on board we've ever worked with has the main KPI of the volume of stock traded going up, which in theory increases the share price and increases the market cap. That is why they pay companies like Scott and myself in order to help support that, help tell their IR story. But there are other things that are less tangible that still should be measured. So for example, the work that you do across all your digital marketing and your social activity will see an increase in the volume of Google searches for your brand. And if you're a junior miner, nobody's searching, there's not that B2C element. So when you see a spike in people searching for your company name, that's on the back of your investor relations activity. Hence why your website needs to be good so that it converts those retail investors that are coming to your site. So that's something that you would probably look at. I don't think there's anything else really that boards are looking at other than what I've mentioned there.
Yeah, kind of on the macro level, when we look at an IR program, at Skyline, and we do a variety of traditional and social media work. Certainly some of the KPIs that clients hold us to are, as Grant mentioned, liquidity, and increases in liquidity over a period of time, share price appreciation, and there are a number of other quantitative metrics that can be used. Number of analysts covering the company, for instance. Number of shareholders. Has there been an increase in the shareholder base, whether it's institutional or retail, over the last 6 month or 12-month period? Are more analysts covering the company? Is the company attending more conferences? So they're getting invited to more conferences or being more visible. So you have a lot of the quantitative metrics that companies will hold us to. You also have a number of qualitative metrics that are a little bit harder to grapple with. One that many people don't think about, many executives don't think about, is volatility in their share price. And this is sort of parallels their communication efforts. So we have a couple of NASDAQ listed companies that, decent sized market caps, but the stocks are really volatile. It'll go from, $5 to $10 and then back down to $2. And then we get all these investors calling saying, why is the stock down? And we're saying, well, largely it's because the company hasn't really communicated enough about, say, financial projections, or they don't have enough analysts with first call estimates out there. So the stock's a bit volatile because investors are having a hard time pricing what's a fair market cap, what's a fair share price for them. So, helping companies communicate, whether it's through social media or other channels, helping to reduce some of that volatility so the stock can find a home so that's fairly valued vis-a-vis the comps in the marketplace. And then the stock price moves based upon corporate news, fundamental news. That's a qualitative achievement that a lot of companies don't understand. And that's one of the things that IR, and whether it's through traditional IR or whether it's through social media, that's an important thing as well as reducing that volatility, and having that security reasonably priced or fairly priced in the marketplace.
Okay. I get the question a lot about volume, and we have companies that we service that have a small shares outstanding. And maybe there's 2 people in management and a couple of contractors. And some of the thoughts that I bring to the table are, if you focus on profitability and growth and execution of your strategy, if you're worried about volume, you're going to have to keep re-educating your selling shareholders to re-educate new shareholders. And when you have effective campaigns, how can you do that? And this becomes a challenge for many issuers. Does anybody have any other comments or quick close-ups that we have here, just as we close out? I think we're coming to the end of our time, and all questions that have been asked will be answered probably by email, but let's have some closing comments from all of our presenters.
Yeah, a quick one for myself, Andy, is that investor relations is really, really important. And fundamentally what I've learned is IR marketing can't make bad companies good. It just can't. But IR marketing done well can make good companies significantly better. And that is the key to this. And I'm very confident that an always turned on approach to IR marketing is right for almost every company.
Yeah, I would agree completely with Grant's comments. Too many companies think that IR is something you turn on when you need it, when you need to raise money, or you need to get the share price up, or we need to increase volume. That's the wrong approach. And it often leads to dissatisfaction, typically with the IR agency that they've employed to help them out in the short term. It's running a second business. You have the operating business and you have the public side. And the public side is important. It's important to your shareholders. It's important to your employees. You have an obligation to communicate well, communicate frequently, be transparent. These are critical obligations as a public company. And in the long run, you'll do yourself, your shareholders, and your employees a great service by employing constantly on IR strategy and communicating effectively in a transparent manner.
Christy?
I think just to close things out, I mean, I think there's been some common themes that you've heard across this. I think we can all agree on the importance of really building that IR strategy and identifying the types of touch points that you have that you can bring forward to whether it's a social audience or a digital audience. You know, I think a lot of this comes down to just getting started. If you're not sort of in the mix of this already, that's okay. You know, today could be the day that you start, but kind of thinking about it from a planning perspective up front, really figuring out your audience, as we talked about, what channels make sense for your business and for your brand. What can you leverage in terms of content that you already have out there, that you're already putting together from an IR perspective, that you can get more reach and more eyeballs on by, you know, doing little snippets of it in the different social media channels. So I think really, hopefully for everyone, people took away some way to get started. If that's where you are, or if you're kind of much more already in this landscape, how to really build on that and seek out ways to really continue to drive your reach and your engagement, and really drive that back to the core fundamentals of investor outreach.
I want to thank all of you for participating in today's educational session. It's a great start to lay the groundwork for incorporating digital marketing into your IR strategy. We've posted a few presentations for additional information in the chat box, and everyone who is registered will receive an email including a link to this webinar and all the attachments. In addition to that, this webinar will be archived on the OTC Markets website under Corporate Services at Webinars. And again, I want to thank all of you for joining us and everybody for participating. Thanks, everybody.
Thank you.
Thanks so much, guys.
Thanks, everyone.
Take care.